Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Hey there, so glad to have you along today. Now, once a year, tax filing takes up an incredible proportion of your brain space, we understand, until you e-sign and submit that dadgum return. After that, most people forget about their taxes until a refund check shows up in the mail or gets deposited into your account. While this pattern seems reasonable for most people, there are a few things that you should do after you've filed your taxes. There's more? Yeah, let's talk about it today. So make sure your return is accepted by the IRS. The IRS Where's My Refund tool isn't used only just to monitor your refund. You can actually use it to check whether your return has been received or accepted, or whether your check is already in the mail. Sometimes the status includes a reference code, which may or may not require any action at all on your part. And there's actually a list of the most common Where's My Refund status codes. You can find all of this right inside the article at thecollegeinvestor.com. Now, tax filers can actually start checking on the status of your return within a day or two of e-filing. And if you choose to file via mail, though, you're probably going to have to wait about 4 weeks to check. Because of all the staffing issues, the IRS continues to report some delays for late filers. So a return may be in received status for a very long time. In fact, there's still a backlog from 2021. However, the IRS typically works through the current year's returns before picking up on the backlog. Another thing you're going to want to do after you file your taxes is go ahead and correct any errors in your filing. Tax software can prevent a lot of clerical errors, but the IRS may flag certain issues, like an incorrect business deduction or incorrectly claiming a dependent. If the IRS does flag an error, you will need to correct the tax return by filing a 1040-X. A lot of tax software programs do allow filers to amend their current year returns, either for free or for just as minor additional cost. If you made a filing error, you'll want to correct it as quickly as possible so you can collect your refund or make a payment if you have to. But don't rush this step, especially if you think the IRS made an error. A company like Community Tax can help you figure out what went wrong, and they can actually help you to correct the errors too. Again, they're called Community Tax. You can see a link to their website at thecollegeinvestor.com. If necessary, you might have to figure out a tax payment plan. The first time you owe the IRS money, you might be caught by surprise. I did, to the tune of $2,500. Most people receive small refunds for years, but they might owe the IRS due to a windfall or because they switched to self-employment. When you owe the IRS money, you need to figure out a payment plan. The IRS payment plans can be a good start, but low-interest loans might actually be better for you. We have a handy article for this occasion when you owe back taxes. The link again is right inside of this article at thecollegeinvestor.com. All right, so once you have all that figured out, you can also adjust your withholdings or your quarterly tax payments for the next year. Most W-2 employees have taxes withheld from their paychecks, and typically, an employed person who properly fills out their federal and state W-9 form will receive a small refund each year. However, some people end up with huge refunds, and others end up actually owing their state or federal government money. To correct this issue, employees will want to resubmit a W-4 form to their HR person. Most states have an equivalent form. If you received a massive refund, you're going to want to claim more allowances than you're currently claiming. If you owed money, you will want to claim fewer allowances. Here's the reason why you claim more allowances if you get a huge refund. It's not good to get a massive refund. You're giving the government an interest-free loan on your money that you should have received during the year. So you want to get that as close to zero as possible. Very high earners sometimes need to have additional money withheld each paycheck just to ensure they don't owe the IRS at the end of the year. Self-employed people, like myself, and small business owners typically have to stay on top of their tax payments through estimated quarterly tax payments. If you owed a large amount of money relative to your income, you're going to want to increase the size of your quarterly tax payments next year. This can keep you from owing so much money at the end of the year. You can also store a copy of your tax return. This is crucial. Store a copy for a minimum of 3 years in all situations. You need to hold on to the records in the tax return for 7 years if you claim bad debt or worthless securities. If you owed money on your taxes, you need to hold on to the return for 2 full years after the debt is paid in full. Holding files for 3 years allows you to file an amended tax return in the future just in case you catch an error in your favor. That's always good. It's like finding a $20 bill in your pocket. Most of our recommended tax software programs give users access to electronic returns for 3 to 5 years. However, software systems can change hands, and users might not be able to access records for weeks or even months. Don't think this could happen to you? It did at the start of this year when Cash App Taxes purchased Credit Karma Taxes. Rather than rely on your software company to keep your records, go ahead and download a return and then store it in a cloud location. I actually use Dropbox, but other secure sites are fine. Google does well too. Now, there's no reason to print a copy of your tax return if you have access to it online. Store it on a flash drive if you have to. Use your refund wisely. Some people do earn small bonuses throughout their careers. Others receive an inheritance. But a tax refund may be one of the few financial windfalls that most people experience several times in their life. So it can be tempting to use the money from a refund to pay for a vacation or to put a down payment on a pickup truck. Before you spend the money, consider whether you can and should use the windfall to boost your bottom line. A tax refund is not a gift from the government. It's money you worked hard to earn, like I mentioned earlier. It makes sense to put the money to work for you, now that it's back in your pocket. If you want ideas on how to do that, use your refund wisely, and all the links and stuff we talked about today, it's all inside this article. Just copy and paste the title of the podcast right inside the search bar at thecollegeinvestor.com. Again, thecollegeinvestor.com. Thanks again for stopping by today, and we'll talk to you again real soon.